I often get asked questions around asset allocation in our funds and how we think about it. So let me try and explain it in very simple terms here. I think the big difference is if you were to look at a other multi-asset portfolio, like a balanced fund has pretty static ranges around what they want exposure to in terms of asset classes. So, it will be a chunk in equities, a chunk in fixed income, some property, some cash, some of it will be local, some of it will be offshore. For us, the asset allocation is actually significantly more fluid, and we think that's a competitive advantage. And the reason I say that is because there will be times in the cycle where bonds are not offering us great value, and it's not something we particularly want exposure to. We never want to have exposure to something just because it's part of an index or a benchmark. We want to have exposure to assets, to investment ideas that we think are the best possible investment ideas for our portfolio and for our investors. So the appeal for us from the hedge fund perspective is we don't have those static ranges. You will see exposure sometimes to fixed income in the funds. You will see exposure to some property stocks sometimes, if those investments make sense from a return perspective for our funds. So I think that the main takeaway here is it's not a static range. We're not looking to optimize to say we want 70% in equities, 30% in bonds, 10% in cash, or whatever the number might be, but much more a case of saying, where are we finding the opportunities? If there are lots of opportunities in the equity space, then our equity content might be higher. If there are some fantastic opportunities in the fixed income space, then you might find that becomes a bigger part of the portfolio for some period of time. Likewise, between local and offshore investing, I think for us it's a case of saying, where are we going to get the best possible risk-adjusted returns for our investors? And that will kind of guide our decision-making on that asset allocation process. Cash, just generally, I think you'll find that in a hedge fund there will be some cash component, and it's mainly just kind of an outcome of the bi-directional investment strategy. So when you obviously have short positions in your fund, those short positions generate cash when you've sold them. So there is cash as somewhat of a byproduct, but we don't see cash as a strategic asset class. It's not an asset class we want to actively allocate to. It's much more about giving us the optionality to deploy that cash when we see opportunities that we want to take advantage of.